Welcome everyone to the Daniel Krug and Associates Market Update for June 2026.
I am Daniel Krug, CEO and Senior Wealth Manager at Daniel Krug and Associates, and
I'm Rocky Istvan, Chief Compliance Officer and Associate Wealth Manager at Daniel Krug and Associates, and I'm going to jump us into what's going on in the economy right now. And if you take a look at our economic speedometers, you'll see going from May to June that we're continuing to see a softening in our indicators. There's primarily being driven by the price of global oil due to the Iran war. That is probably affecting most of what we're seeing. Other parts of the economy maintain pretty relative good strength at this point. However, we do want to point out that it is cautionary with what's going on with the war at this time. When we look at the market, though, however, at our next slide here, you can see that we've had quite a bit of a rally since the middle of March, roughly, when they started talking about the ceasefire with Iran. And you can primarily see, if you look at the right side of this chart, that semiconductors and technology have been leading the way in a recovery. When we look at our year-to-date numbers on the left, you can see all of our markets are doing well. The S&P is up. International developed markets are up. Emerging markets are doing very well. However, they're recovering from a few years ago still. So that's been a great story to see that we're having a broad recovery. When we look at the bonds have stabilized. We're not expecting huge increases in the bond market like we saw the last couple of years. However, they're still giving us a good yield. And that's why if you look at the global 60-40 portfolio, a combination of stocks and bonds, that is up about 7.6% here, not even halfway through the year. So good market at this point moving forward.
well, we would be remiss if we didn't talk about the Fed chair, the new Fed chair, Kevin Warsh. And I'm telling you, he's bringing in some new ideas that it's almost like a total change of guard at this point. So he talked about an awful lot of things, didn't give a whole lot of information, but what he did give was that from an interest rate standpoint, the Fed is targeting a rate of 3.8% by the end of 2026 and 3.6% at the end of 2027. Now, what was the big change out there from the presentation he gave 2 days ago? Well, first, the Fed is actually creating 5 task forces. So there's going to be 5 different task forces that are being put together right now. One is the Fed communications, another one's about the balance sheet. The third is the reliance on existing data sources, how that relates to the future. Fourth one is productivity and jobs in an era of transformation. And then number 5 is inflation framework and inflation framework strategies. So they're going to be doing a lot of research, a lot of thinking outside of the box to see how things work, to see if there's changes that need to be made in the way the Fed moves forward. They did say that, or he did say that sometime between August and the end of the year, we'll start seeing some findings from those task force. The other major thing was that they dropped the forward guidance right now. And the reason is because we've got an interesting economic and financial environment, especially with AI being introduced to the mix. So we're going to be watching this to see how it plays out and what we're actually going to be seeing moving forward. Well, that was a lot, but I think there's some major changes that are going on right now that are going to be positive.
Yeah, and I think it's good overall. You know, they're going to take a fresh look at how the Fed calculates things and addresses interest rates, all that kind of stuff, the labor market. So I'm looking forward to that.
Yeah.
And along with that, the markets mid-year are staying strong.
Yes, they are.
They're looking for more reason to grow than not to grow right now. So I think that's a positive for our investment community out there.
Yeah, I think you're right there. So it's going to be interesting watching what happens and seeing how the Fed's information. I do know this: when the Fed changed, the market jumped as well.
Yep.
So the market likes it, and that's good for everybody. So let's go ahead and close up. If you want to review this, you can go directly to our website at mydkna.com, or you can go straight to the YouTube site at Daniel Krug and Associates and review any of the videos we have in there from the past. And you know, we've always said this, there's no need to worry. We're ready for 2026 and beyond. You take care of your family and we will take care of you. Goodbye.